Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A fifth bearish black crow yesterday, and once more a really interesting one as well. Now this time it wasn't the day itself, but what it represented. First off, the day itself. The move down and closes clarified the drop below the November 2020 low at 116.02. Prices pierced the 2019 high at 115.70, but still closed back up over it. However, the main features were strategic. I've said since Tuesday that we have, over the June to date period, created a pattern known as a cat's ears. Yes, that is indeed its name. Cat's ears. Anyway, this pattern is now in operation, and we could see a potential move down to target X in the 114.5 area. The other important strategic item is that rather late in the day, this past week has made a monthly key reversal down for September. All these strategic patterns and actions must now weigh in on this market. And so far today, another test below the 2019 high at 115.70, but also another pullback up. We've had a bearish week here, so it would not surprise me to see some profit taking pullback taking place ahead of the weekend. Cable, aka sterling against the US dollar. A bullisher army, just about, and that was on yesterday. Now, as I've previously stated, the recent move down has been important on oh so many levels. Not just as a large action on its own, but for starters, breaking out and down from the recent sideways triangle formed from the late July downtrend, currently at 138.85, and the middle time uptrend, currently 136.43. This move lower had initial target X in the 134.90 area and a secondary target X1 in the 132.65 area. Now we've already achieved target X, and as you'd expect, the secondary target is harder to reach than the initial. This move down has vindicated the early June to late July bearish shift pitchfork, with the market moving down through the middle time, currently 134.77, from the upper time, currently 137.09, and then back to hold around the middle time. Now finally, I have droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, this significant move down during the course of this week has revitalized that idea, and we now have some potential targets for this pattern. Initial target X2 would be in the 133.60 area, with a secondary target X3 in the 131.10 area. As you would expect, the secondary target will be harder to achieve than the initial one. So far today, a small move lower again, this time utilizing the overhead middle time as a bearish base of action. We seem to be in fairly free territory below until target X2, oddly enough, but the market's pulled back up and has moved up over the September 2020 high as I speak, at 134.83 the area. Euro sterling. Another interesting action yesterday, a bearish engulfing pattern. This is not the hardest ask of the market, as after all the previous session was an indecisive spinning top. However, the top was hanging off the declining long moving average, currently at 86.38, which was interesting, and the market slowed its descent the closer it got to the flatlining medium moving average below, currently at 85.66, and also the nearby also flatlining short medium moving average, currently 85.5. I suppose looking at the last 3 days or so, you could see it as a possible bearish evening star pattern, but I'm not entirely comfortable with that idea. Now, looking ahead at the long moving average overhead, I suspect it was abetted in its bearish roll by the flat overhead trend line of the previously highlighted large right angled broadening formation formed since late May. It had been diminishing as an idea, but the move up and then back down has reinvigorated it. The pattern is made up from this flat April 2020 low and the lower channel line currently at 83.59, and that's of the broken May to August bear channel. Finally, and in some ways more importantly than many of the previously mentioned supports and resistances, we have one outstanding thing left for this week, with the daily key reversal up we saw on Tuesday, and with the sustained move up since Tuesday, we are set to possibly have a weekly key reversal here this week. If we close tonight either over 85.65 or under 85.35, then we'll be on. Right now, despite yesterday's bearish engulfing pattern, we are looking at a weekly key reversal up. So far today, a lower open but a seeming interest in taking prices back up through the overhead declining long moving average still weighs in on a sustained attempt higher. We've seen the market actually pull back down, and we're really roughly where we were, just a little bit lower than yesterday at this time, or at the close I should say. US dollar against the Indian rupee. A bearish dark cloud cover yesterday and almost a bearish engulfing pattern as well. The market opened up over the 50% Fibonacci line of the February to April 2020 move at 74.26, but ended up below it. However, the key pattern that impacted this market yet again is the recently drawn small late August to September based bullish shift pitchfork. Now the lower time is currently at 73.73, the middle time is currently at 74.09, and the upper time is currently at 74.45. The market has bracketed mostly in between the upper and middle times, though it has now started to look as if the middle time may be suspect. Going back for a moment to the 50% Fibonacci line at 74.26, it is actually in the midst of a congestion zone from August, between the lesser Fibonacci level at 74.07 below and the other lesser Fibonacci level at 74.46. Despite moving below the 50% Fibonacci line, the market still remained within this congestion zone, but it's sort of like edging towards the lower end of it. Now so far today, a slightly higher open and an attempt higher, well over the 50% Fibonacci line. However, the time seems to have influenced the market yet again, and we're seeing prices pull back below the 50% Fibonacci line and down towards the middle time as we speak. US dollar against the Brazilian real. An immediate countering combined key reversal up and bullish engulfing pattern yesterday. The market initially followed on lower with, well, from the previous session's bearish harami. Prices dropped below the important close combination, or nearby combination if you like, of the 50% Fibonacci lines for 2021 at 538.46 and for the May to June 2020 move at 539.28, as well as the middle time of the recent late July, late August bullish shift pitchfork currently at 538.58. However, it soon became obvious that the market's heart wasn't in the move lower, as prices stalled well ahead of the next support. That's the flatlining long moving average currently at 533.07, and it turned back up to rise enough that prices challenged the August high of 547.5. However, that was perhaps a little too high, and prices settled for the combined bullish pattern mentioned at the start. Looking forward, please still continue to keep an eye on the bullish shift pitchfork as it performs so well, especially the middle time. This is the indicator for the gently bullish incentive that has been evident here, well, since the end of August. We now have to look at that August high as well as the lesser Fibonacci levels at 550.12 and 552.91. Plus, they're the main obstacles on the top side. US dollar against the Mexican peso. A fourth bullish white soldier yesterday. The market punched up and closed over the key 50% Fibonacci line for the 2021 move to date at 2058.49. This is also a continuation of the move up from the June to date descending triangle. Now we have an initial target X for this pattern in the 2089.30 area, and a secondary target X1 in the 2123.5 area. This is of course dependent on the market maintaining itself over both trend lines. Meanwhile, on top we now have entering the frame the June high at 2074.80. This all again severely threatens the idea of the main device used to direct this market lower in recent times, and also its main recent attractor should be, has been, will be, maybe, not sure, but it still was the influential gently declining neckline of the February to March head and shoulders top. That's currently at 1964.64. It is, as I said yesterday, if we manage to close over that June high, then I think its role, that's this attractor's role, has just been retired. Well, watch and see. So far today, a slightly lower open and an attempt higher up towards the June high, but failing to make it so far. And moving back below the 2021 50% Fibonacci line. We're looking like a bearish harami right now, but I am not so sure. We'll have to see how some developments take on in an hour or so to come. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.